What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. The Fed is going to pivot. I also raised the volume on my mic a little bit. Got some feedback. Thank you so much that the mic was a little bit silent. We'll keep working on it. Let me know if you can hear the video, what the audio quality is like, all that good stuff. But let's talk about this Fed pivot because this is super important and this is going to really alter the discussion tonight. So this was from our Discord in the afternoon. Pivot language from the Federal Reserve could be coming next week. What you need to know before the Fed's next meetings. The Fed meeting is next Wednesday. A pivot from the Federal Reserve could be coming sooner than most are anticipating, even as the labor market continues to show strength. What happened, according to a tweet from Fox Business's Charles Gasparino on Thursday, BlackRock is telling financial advisors that the firm is anticipating pivot language at the Fed's upcoming Fed meeting on November 2nd. Now, why is this important? Well, the Federal Reserve and BlackRock, they are basically the same exact institution. They're pretty much like in bed with each other. BlackRock actually manages the Fed's bond portfolio. Like it is, they're in bed. If BlackRock thinks that the Fed is going to pivot, they basically are going to pivot. Now let's talk about today's price action. We'll go through the earnings as well. Indices. We had the S&P 500 finishing down 0.53%. We had the NASDAQ down 1.82%. These small caps actually finished out positive, up 0.02%. The dogs of the Dow were up 0.65%. Our ARK Innovation ETF finished down just a smidge, down 0.05%. And the TLT Long Bond ETF finished up 1.05%. Now, along with this pivot talk, remember, Meta reported earnings yesterday, and it was an absolute bloodbath. The stock ended up finishing down 25%. Now, I'm old enough to remember when mega cap tech earnings being huge misses and whiffs would really derail the market and cause it to spiral out of control. Now, keep in mind, we've been in a bear market for almost a full year now. The market has been spiraling out of control, slipping into the abyss over a myriad of catalysts. You would think that with mega cap tech earnings being weak on top of this, shouldn't the market have just rolled over today and completely folded? Lo and behold, we have the small caps, which are pretty risk-on areas of the market, actually positive as the NASDAQ finished down almost 2%, really just because those mega cap tech names dragged it down. We had a slight uptick in volatility. This is also kind of interesting and a positive divergence here. You know, S&P 500 was down, NASDAQ was down, volatility barely picked up whatsoever. Breadth actually was positive. We had 53% advancers in the small caps, 55.8% up volume. The trend model remained at a +3. Now let's go through the earnings from tonight. So we got a huge whiff from Meta yesterday. Now Amazon also with another huge whiff. Pretty much what we can see from mega cap tech earnings is that the economy is getting weak. Amazon down 12% in the after hours. At one point it was down as much as 20%. So pretty wild stuff. Pinterest reported as well. It is actually up 9.41% in the after hours. In terms of today's economic data, we got durable goods orders, we got GDP data, and the durable goods orders came in a little bit weaker than expected. This GDP data, which is completely lagging, this was at 2.6% growth. And then initial jobless claims, these came out a little bit lighter than expected. In terms of the VIX Futures term structure, this had been inverted for about a month. And then over the last 2 days, it went uninverted. Now we have this upward sloping term structure, which is a good thing. Now we know we got this previous hint about a Fed pivot. This was on Friday, where Daly said, things are starting to take hold, pent-up tightening working its way through the economy. We won't just keep going by 75 basis points, and really just signaling that they're getting a little bit softer and becoming more dovish. Now, Finviz Heat Map, look at this. Pretty much only the mega cap tech stocks were down. Pretty much everything else in the market, it's not like it was a rip-roaring bullish day or anything. It's tough to have that when these mega caps are down so much. But the rest of the market looked just fine. Sectors. We had the aerospace and defense sector up 1.69%. That did end up being our big winner, which is not what we want to see. The fintech, ARK Fintech was up 1.92%. Okay, so that was the big winner. but aerospace and defense was in second place. And then pretty much a mixed bag otherwise. Style factors, we had the high div low vol style factor up 0.36%, and we had small cap value up 0.46%. It's not exactly the most risk off. In terms of trades, what did we do today? I got long the Shopify common shares, and this one was breaking out of the monthly value area. I also got long some Bed Bath & Beyond common shares for 516. One of the areas of improvement that I've been working on is catching meme stock rallies. Typically, investors, whenever the meme stocks start running, they get all excited. The stocks will be up huge, and then the retail punters dive in, and then they get hurt. And it's a whole big thing. But I'm trying to create a methodology for spotting these meme runs ahead of time and diving in. So triple BY, that's really just like my first foray into any sort of meme exposure. Added that today in pretty small size. And then, of course, Wolf. Wish we could just go right over this one, but I was long the common stock. Yesterday I closed out for a big loss. And then this options trade also closed it out for 30 cents. I'd paid $16.10. Basically a max loss. That one definitely stung. Appreciate the kind words for everyone watching these videos. Because yeah, that always sucks. But to be honest, upward and onward, sometimes you have to win ugly and the show must go on. Let's take a look at the S&P 500. Now remember, we just got a whiff from Amazon. Amazon's down huge, and the market is only down 0.47% in the after hours. This is just a mere pullback to the 5-day EMA. This is absolutely nothing. Don't get it twisted. So tomorrow is going to be incredible to watch how the market actually responds. Yeah, the Nasdaq's only down 0.7%. This is nothing. And I say that like 0.7%, it's not like it's nothing. But in the context of Meta getting crushed, Amazon getting crushed, Apple doing all right, you know, why is the market holding up so well? I believe it's because of that Fed pivot. Russell 2000, it's up 0.03%. Normally, when the market's selling off, the Russell 2000 is getting hit the hardest. And so far, we're not seeing that. It's actually positive. And then the Dow Jones, down 0.04%. Nothing crazy. Dow Jones has been leading. And then let's take a look at bonds. Remember, bonds were the big sore spot. And we can see the 10-year Treasury futures have been rallying for a couple days. And they are actually up in the after hours. And these 30-year bond futures as well, they are also rallying higher. So this is good stuff. Only problem for today was that the dollar index finished out the session higher. But with that said, the dollar index was incredibly oversold. So, I mean, we'll allow it. We'll allow 1 day of green action. Definitely something to keep monitoring tomorrow. I would say in terms of risk factors, you want to keep this on your screen. And now let's just take a brief look at the ARK Innovation ETF. ARK also doing okay in the after hours. There's no futures contract that trades on this one. But I can see here we're barely down, if anything, in the after hours. ARK Innovation ETF, we're starting to move beyond this supply zone down here. And we're moving into this supply from late September. So if we can get ourselves back inside this monthly value area and we can clear out this supply, I really think that ARK could have a nice move into the end of the year. So we'll see what happens there. Shopify was the big name that I added for today. This one reported pretty solid earnings and had a very good reaction. You can see we're breaking out of this monthly value area. I do believe if some of the more speculative stocks rally into the end of the year, I think you want to be finding the ones that put up good earnings and didn't get obliterated off of their earnings reports. I think those could be good candidates to trade into the end of the year. With that being said, that about does it for today's market recap video. Thank you so much for tuning in. Feel free to leave a comment, like the video, subscribe to the channel, and we'll see you all next time.